I need to tell you about 3 penny stocks that 97% of American investors are completely ignoring right now. And one of them just secured a contract that could send its stock price vertical in the next 60 days. While everyone's obsessing over the same tired picks, there are real companies with real products trading for pocket change that are positioned to explode. I'm not talking about pump and dump schemes. I'm talking about legitimate businesses with actual revenue, breakthrough technology, and catalysts that could multiply your investment. Today, I'm revealing 3 penny stocks that check all my boxes, and by the end of this video, you'll have investment opportunities that your friends have never even heard of. Q. Let me explain what I mean by underrated, because this word gets thrown around too much. When I say underrated, I'm talking about stocks where the current price doesn't reflect the actual progress the company is making. These are businesses hitting milestones, signing contracts, growing revenue, or developing technology that could change their industry, but for whatever reason, the market hasn't caught on yet. Maybe they don't have good investor relations, maybe they're in a sector temporarily out of favor, or maybe they're just too small for institutions to notice. Whatever the reason, these pricing inefficiencies create opportunities. The key is finding these companies before the crowd discovers them, because once momentum kicks in, penny stocks can move 50, 100, or even 200% in weeks. Underrated penny stock is Microvast Holdings, ticker MVST, currently trading around $1.50 to $2 per share. Microvast manufactures ultra-fast charging battery systems for electric vehicles and energy storage. While everyone talks about lithium-ion batteries from big Chinese manufacturers, Microvast has developed proprietary technology that fully charges in 15 minutes, has better thermal stability, and maintains performance over more charge cycles. This is critical for commercial vehicles where downtime costs money. A delivery truck that charges in 15 minutes is much more economical than one taking an hour. The company already supplies batteries to major manufacturers in North America, Europe, and Asia, and they just reaffirmed revenue guidance of $165 to $175 million for 2025. What makes this interesting is they're approaching EBITDA profitability, a massive inflection point. Once they demonstrate sustained profitability, institutional investors who can't currently touch unprofitable companies will suddenly be able to buy, creating buying pressure. The EV battery market is projected to be worth over $400 billion by 2030. Blesks are real. They're still burning cash. They face intense competition from larger companies, and the stock has been extremely volatile. However, at current prices around $1.75, the market is pricing in low expectations. If they hit profitability targets and land major contracts, this stock could easily be at $4, $5, or even $8 within 12 to 18 months. I would keep this to 2 to 3% of a portfolio maximum, use a 30% stop loss, and be prepared for volatility. 2. The second underrated penny stock is Vuzix Corporation, ticker VUZI, trading between $3 to $4 per share. Vuzix develops smart glasses and augmented reality wearable technology for enterprise applications. They just secured orders totaling nearly $1 million for their M400 smart glasses from a major online retailer for logistics operations. These aren't consumer products like failed Google Glass. These are industrial tools that improve efficiency in warehouses, manufacturing, and field service. Workers wearing Vuzix smart glasses can see instructions, scan barcodes, and access systems while keeping hands-free. The productivity gains are substantial, and that's why companies are buying them. The augmented reality market for enterprise is projected to reach $75 billion by 2030, and Vuzix is one of few publicly traded pure plays. What makes Vuzix underrated is most investors still see them as a failed consumer company, but they've completely pivoted to enterprise, where there's real demand. The company is debt-free, which is unusual for small-cap tech, and they have financial runway to execute. The catalyst is expanding adoption in logistics, as companies like Amazon and FedEx invest in automation. If Vuzix signs more major contracts, the stock could easily double. The risks include volatility. They're still unprofitable, and they have limited cash runway. But for investors wanting augmented reality exposure without premium prices, Vuzix offers compelling risk-reward. The third stock is ProKidney Corporation, ticker PROK, trading around $2 to $3 per share. ProKidney is developing cell therapy to treat chronic kidney disease. Over 37 million Americans have this condition, and current treatments are limited to managing symptoms until dialysis or transplants. ProKidney's approach uses a patient's own cells to potentially regenerate kidney tissue, which would be transformative if it works. Their lead candidate showed promising Phase 2 results, and they're advancing to Phase 3, the final step before potential FDA approval. The company has strong cash position and experienced management. 5. What makes ProKidney underrated is the market heavily discounts probability of success, but the upside if they achieve FDA approval is enormous. If their therapy proves effective, this company could be worth billions given the massive patient population. The catalyst is clinical trial data in 2026. The risks are substantial. Clinical trials can fail. Regulatory approval isn't guaranteed, and there's been insider selling. But for investors comfortable with biotech risk, this represents interesting speculation. 2. Here's how I would invest in these three. Total allocation to all combined should not exceed 5 to 7% of your portfolio. I might put 3% in Microvast, 2% in Vuzix, and 1% in ProKidney. Use tight stop losses, probably 25 to 30% below entry. Take profits aggressively if stocks move. If Microvast doubles, sell half. Don't get greedy and ride winners back down. Constantly monitor news, earnings, and insider activity. These stocks are underrated because Microvast is making progress toward profitability, but trades like a failing company. Vuzix is winning enterprise contracts, but investors see them through a failed consumer lens. ProKidney is developing breakthrough therapy, but biotech is out of favor. These disconnects create opportunities. If you found this valuable, subscribe for updates. And remember, this is educational only, not financial advice, and penny stocks are extremely high risk. Do your own research and never invest more than you can afford to lose. Thanks for watching.